I went down this journey that you're going down now in 2012. And that journey led me to crypto. I saw it and I knew that this was the answer. And that's why I first bought Bitcoin in 2013, was exactly this, is once you see what has happened, we know the system now, regardless of how it ends, answer is you need to transition to what I call the Bitcoin life raft or the parallel financial system. It's there and you can participate with $1 or $1 billion.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of Real Vision, Raoul Pal, sounding the alarm on what could be the end of the boom for the US crypto market. Pal sees cryptocurrencies, especially Bitcoin, as a solution to the flaws of the current financial system. He believes cryptocurrencies offer an alternative and parallel financial system accessible to everyone, regardless of their investment capacity. We're currently seeing the ripple effects from the FTX collapse last November, and the coming weeks will be an indicator for how cryptocurrency will move forward in 2023. Let's get right into the latest interview with Raoul Pal. Before we dive in, don't forget to hit the like button and subscribe.
What we are doing since 2008 is mutualizing the bankruptcy of the system via the debasement of currency, which is the...
When you say mutualizing, you mean making it everybody's problem?
Yes. You can either raise taxes, which they're trying to do too, but they're also printing currency via the mechanism called quantitative easing, which is actually debasing the currency, which means that every time they do it, asset prices optically rise. They don't actually rise. Because if you look at the central bank balance sheet and divide all assets by it, so you're changing the denominator, it's normally US dollars, but when you use the balance sheet, you say, okay, this is the purchasing power of dollars. Now, how many dollars are in the economy or excess printed? And what you find is something like the S&P 500 has gone nowhere. Real estate, gold, gone nowhere. And there's only two assets that have actually outperformed, which were crypto and technology. Which is why we all feel like even though stocks are going up and our 401k is going up, nobody's getting any richer, okay? We all know this intuitively, that we're not actually getting richer because the stocks I sell doesn't buy me more of a house. So what was the point of buying the stocks if the value of my assets aren't going up? But that is a mutualization, which is bad because it mutualizes it amongst people who don't have assets. So you'll never be able to buy an asset, which is why when you speak to a millennial now, they're like, we can't afford a house. Why? Because they came in to the labor force after the Fed started monetizing or lowering the value of the denominator. So property's got more and more expensive for them. It's impossible for them to buy property really, unless they're really lucky in the workforce or in entrepreneurship or whatever it is. But generally speaking, it's become impossible. And everything has got more and more expensive, assets have, because of this optical illusion. But wages haven't gone up, remember, right? That's the key thing. Assets are going like this. We were doing this before because of demographics, and it was making people pissed. And now we're doing it from debasement, and there's no way around it. So what debasement does, on the other hand, remember, it makes the price of assets look like it's going up. This is why you can't have a banking crisis of the order of magnitude that existed before 2008. The reason being is you just print money the moment you see it, and voila, everything goes up. So if you think about a debt, it's collateral plus the debt, and the collateral is what guarantees the debt. If you've got a banking crisis, your collateral is often falling so fast that, like commercial real estate, right? We're going to have a problem with that. So there's a bunch of debt, and the banks have got this commercial real estate as collateral, and it's all bloody empty, and everybody's going to try and get out of it. So the answer to that is print money and essentially magic that collateral higher, or put it on the central bank balance sheet. Europe has already done this. So I don't think you can have a systemic collapse because the value of the assets can never go down enough. What I think my hypothesis is that, okay, this is very observable. I think it's going to last, this relationship between assets and the central bank balance sheet because of the mechanism of debasement of currency. And I can forecast out what the business cycle looks like. And I also know the amount of interest payments that need to be made because they happened 3.5 years ago. And I can see how far the balance sheet's going to expand. So the balance sheet right now is what, $6.5 trillion or $7 trillion or so. And it looks like it will get to $12 to $14 trillion by the end of 2025. So that puts, and there's a number of other ways I've proven this out in this whole thing. And I'll send you the whole piece. I've not really gone public with all of the whole thing of how it works. But in the end, that puts asset prices massively higher than here, hugely higher. So we're looking at more than a doubling of the NASDAQ from here. Ooh. We're looking at another gigantic crypto run. That's into 2025. So we're seeing huge moves that just come from the debasement. And I've gone through in the Everything Code article that I wrote for Global Macro Investor, which is my kind of premium research service. In that, I've gone through various ways of proving this all out. So that's what I think I can do. But your observation, I think, is really important. I mean, I've sent this to quite a few people, and obviously the subscribers of Global Macro Investor are kind of the world's most famous hedge fund managers, asset managers, and I think it really shocked people and resonated with people. They're like, oh my God, everything makes sense now. And so once you see it, it all makes sense. Now, as it becomes more public as a thesis, and Mike Howell at Cross Border Capital has been talking some elements of this, liquidity, you can see liquidity becoming part of the conversation on financial Twitter and stuff now. What I think we'll probably do is create boom bust cycles. Again, you can't have the bust cycle going below the level of central bank liquidity because optically they make it rise. This is what people don't yet understand. But of course, the stock market should go down 90%. Can't happen. Literally can't happen because of the debasement. It's a money illusion. But what I think we'll do is see, hey, off we go to the races. That's what happened in 2018. 19, early 20, we actually diverged from the central bank balance sheet massively because people starting to figure out this game, which is the moment the Fed stop the tightening cycle, markets take off because they know that the probability of more cowbell, more central bank printing of money, more interest rate cuts is coming. And so therefore we get boom bust cycles. So the boom times are too big, and then you get a bust. And people know that from crypto as well. The long-term trend remains intact, but we keep getting these huge booms, collapse, boom, collapse, but the trend is still up.
According to his in-depth analysis of past market trends, Raoul Pal is convinced that the global recession has already been factored into the market. Drawing parallels with Bitcoin's trajectory in 2013, he predicts a potentially larger surge, followed by a correction, or alternatively, a more prolonged downturn akin to Bitcoin's performance in 2018. Pal points out that even the Powell pivot of 2018, which initially sparked a cryptocurrency rally, eventually led to a market correction as the Fed began to implement rate cuts. He identifies a twofold possibility for the market, one where a sudden rally could force everyone to go long, and another where the market stabilizes, treading water for up to a year. Despite these various scenarios, Pal maintains that his strategy is not to trade, but rather to accumulate and hold, acknowledging that the current market has left most hedge funds wary of investing. What do you think about Raoul Pal's prediction for Bitcoin, the crypto market, and where we're headed in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.